Concerns about Chinese property giant Evergrande's ability to repay its debts rattling investors today over contagion fears. Joining us is Andy Rothman, investment strategist at Matthews Asia. Andy, good to see you as always. Thanks so much for joining us. I'll start with the first question I posed to Jason Pidcock earlier today, which is to what extent is this a big surprise to Chinese-based investors, and quite how widespread is it?
Well, I think to both Chinese and foreign investors who've been following China closely, it's not a big surprise. We've been tracking Evergrande's problems for quite some time. And the government policies which deliberately put pressure on Chinese developers with high debt levels has been in place for almost a year now. So it's not a surprise to most investors nor to the Chinese government.
So what's the government going to do? You would think it would be in their best interest to have an orderly resolution, but then you would also think it might be in their best interest not to take billions of dollars of market value off of their technology and education and other companies, as they've been doing lately.
Okay, well, let's focus first on Evergrande. It is definitely in the Chinese government's interest to use its tools to create an orderly restructuring and prevent Evergrande's liquidity problems from escalating into an insolvency problem. And this is one of the reasons why I think this is not a Lehman moment. The Chinese government has the tools and says that they're willing to use them. Also, keep in mind, Evergrande is not a structurally, systemically important financial institution. It's a real estate developer, which has about 4% market share in China.
In terms of their recent clampdowns, Andy, in other areas, do you think the Chinese government will live to regret those, whether it's particularly in relation to how politically tough it makes it to bail out Evergrande, or just more broadly, they'll regret what it does to foreign direct investment, entrepreneurial spirit, and so on and so forth?
Well, I don't think they're going to bail out Evergrande. I think they're going to restructure it. Evergrande's owners are going to pay a price for this. Investors will take a haircut. The focus is going to be on an orderly restructuring, primarily designed to make sure that individual Chinese people who put money down for an apartment get that apartment, and also that retail investors in China who've invested in wealth management products sponsored by the company get their money back as well. But they're not going to bail them out in the traditional way. But more broadly, I would say that for me, what the Chinese government is trying to do is address some very wide and deep socioeconomic issues in China. And they're the same kinds of issues that we're worried about here, about income inequality, about unequal access to education, about protecting small companies from anti-competitive practices by big companies and protecting consumers. They've just gone about it in a much more dramatic way. And they've also done a terrible job of explaining themselves and communicating their objectives to us. So for me, the question is not, are they trying to roll back entrepreneurs and capitalism? I don't think that's the case, because it's small entrepreneurial private companies that drive all the job creation, all the innovation, all the wealth creation in China. The question is, will they implement these new regulations designed to deal with socioeconomic issues in a constructive way that does not kill an economy which has been really vibrant over the last several decades?
Is it yes or no? What's the answer?
Oh, I think odds are they'll do it well. Now, as investors, we have to be really careful. What we have to do, I think, is not say, well, which sector is the Chinese government going after? They're going after all sectors. Instead, what we need to do is take an active investment approach and say, these kinds of regulations designed to fix these kinds of socioeconomic problems, how does that intersect with the business model of each company that we might want to invest in? If they have a lot of workers and they're not paying them a good salary, if they're not getting access to benefits, if the company is in manufacturing but they're not using the latest technology to clean up their wastewater, if they're using anti-competitive practices, if they're trying to monetize data without permission of consumers, those kinds of things. Yeah. But I think there is a way to invest smartly through this regulatory change.